Hello, everyone. Hello, everyone. And looks like the market is back. But is it truly back? What is going on? What is really going on in this market? Would you like to know? So, I am going to basically give you five. I'm going to talk to you about five very specific items. I'll talk to you about five specific items that you need to understand so you could make your own mind as to what the heck is going on in this market. But it's so much what's going on in the market, it's what's actually going on in the economy, what's going on in the world. This is a little bit more complicated than most investors think. So I want you, my subscribers, to understand what's happening. I mean, listen to me. I mean, it's my opinion. Okay, my opinion based on my years of experience and my years of teaching, and what I'm seeing in front of me. Okay, and what I'm seeing is, I believe, tectonic plates are changing. Now, I know the market is up today. The market is up because there are discussions going on with Trump and the administration. But is that going to be enough? That's the question. So let's talk about, let's first of all, let's hear it from the specialist. Now, keep in mind that this guy basically was a was a bull, right, on Tesla and all of the tech names, which is great when everything is going up. But now things have changed. The thing to make money in anything, you have to be first. Okay, you need to create your own product. You got to buy when everybody else is selling, and you have to sell when everybody else is buying. You have to be first if you want to make money. You rarely make money going after something that has been created. You don't make money by buying somebody else's product, right? You really don't make money by franchising, for example. Franchising is, yeah, you make money, but the only thing is, most of the fees are going to the franchisor. Right? You don't make money by buying a car because you're using it. You make money by creating the car. You make money by creating something. You don't make money by working for someone else. Okay. Same thing with the stock market. You do not make money listening to what people tell you you should be doing because they're already doing it, and if they're already doing it, the profit is gone. Okay, but keep in mind the good news is you could make money when the market goes up, and you could make money when the market goes down. So right now the market is up, but be careful. Don't forget, you usually don't have a crash until someone doesn't talk about it. Meaning that if everybody is honky dory, it means that worry about the crash. When people talk about the crash, don't worry about the crash. That's how it works, unfortunately. So let's first of all listen to our friend Dan Ives. And Dan Ives has been a big proponent, a big a guy that really likes tech, and he's been liking tech for a while. But now, somehow, I think that things are changing for him.
Yeah, I mean, look, it's essentially an economic Armageddon. If these tariffs stayed in place, and the reality is talking in front of a microphone in the 202 area code is a lot different than the reality of moving the supply chain. And I think it speaks to our point that when you look at China exposed names from NVIDIA to Apple to any of the semi names, I mean, this is as nervous as I've seen investors going back to COVID March 2020.
So what do investors need to listen for on these earnings calls? What are the fundamental numbers to watch?
I mean, this is kind of a ridiculous question because now everyone is watching and everyone is doing. You're not going to benefit from any of this.
Perhaps when it comes to margins getting squeezed, to understand what the real dynamics are going to be throughout the rest of 25 and where you can continue to valuation premium.
So I think there's three things I think you have to look at. One, I mean, Navarro talked on negotiations. You have to assume that these tariffs don't hold in their current form. If they hold in their current form, then essentially you have 15 to 20% demand destruction across the board in terms of costs that are actually going to have to come through. And
what he's talking about here is probably what it is that the US administration is after. You have to assume that what they want is they want to collect from Apple. They don't want to negotiate with the 100 countries. They're going to make noise. They're going to imagine 100 countries. Do you know how long it's going to take? First, they got to place a phone call. Then you have to start talking to them. Then you have to negotiate. Then you have to sign. It takes forever. In the meantime, what they want to collect from Microsoft, who rarely pays any type of tax, or Apple. Look into it. In fact, I did a video on that. So basically, what they want is they want that iPhone that you buy for $1,000, and for which I believe Apple is making a huge amount of profit. The EBITDA margins are pretty large on an iPhone. Okay. Now they're scaring you by telling you, "Oh, if this doesn't work, then you're gonna have to pay $3,000 for an iPhone." No, what needs to happen is that Apple needs to cut on its profit, and this is what he's referring to. If the if the tariffs don't go away quickly, then you're going to get hit. Then Microsoft is going to lose, who knows how much money. And they're not going to lose money. They're going to make less money. Okay, fine. But if that's the price to pay, that's the price they're going to have to pay. And this is probably what the administration is doing. Now, I'm not saying I agree or disagree with them. I'm just telling you what's going on here. Okay. So basically, they are going to want to be able to collect that money that they have not been able to collect from these large US companies doing business overseas. It's simple as that. They're going to go and they're going to wait until they get it. Meanwhile, while you're negotiating, you're still collecting the money. Okay. And I'm sure it's not so much, China calling Trump that you have to look at. You have to see when Apple and Microsoft start going there and say, well, what are you doing? I thought we were friends. Okay. So that is the first thing.
and to that point, I don't think a lot of companies even give guidance on their 1Q conference calls, given what we've seen in terms of the head scratching tariffs. The thing that you really have to focus on in terms of like what demand.
You notice what he said? The head scratching tariffs, because he doesn't know what they're doing. You have to understand, the US administration is not playing checkers here. They're playing chess. They're thinking 2, 3, 4, 5 moves ahead.
Destruction looks like in terms of when it comes to AI revolution, data center build out, inventory. And then, of course, you start looking at consumer focus, names like Apple, in terms of what that means for iPhones. The reality is, if you want an iPhone made in the US and you want that for $3,500, we should make it in the US.
Yeah, well, I don't agree with that kind of argument. That's scare tactics. Nobody's going to spend $3,500 for an iPhone in the US. Okay. So that means, well, we're not buying iPhones anymore? No. What happened is then you need to lower, you need to sell it, but you need to take a cut in your gain. That's what Apple needs to do. Of course, that's going to impact the stock price. That is for sure. That is going to, and that's what they're doing. And that's why you're seeing these huge drops.
If you want it for $1,000, you keep it in China. So I think these are all the issues that investors are trying to sort of game out.
So in light of that, I'll just use Apple as an example. There's just this automatic assumption that any kind of price increase tied to 54% tariffs on goods imported that have been made in China, iPhones perhaps included in that, is going to be pushed out to consumers. Is that actually going to be the case, especially if you look at an Apple that has pretty robust margins?
Mm-hmm. Oops. She brought it up. She says, well, hold on. Why? Why are they going to bring it up? They have such huge margins to begin with. So don't scare people with $3,500.
Maybe it's going to absorb some of that cost.
Yeah, Mark, if it was a smaller tariff, that's something that maybe that they can absorb. But these are numbers, I mean, that are, I view as absurd. And I think many view it across tax. So there's only whoever's going to pay it, it's the consumer. And that's the reality. You can talk about tariffs all you want. Consumers are going to pay it on iPhones. They're going to pay it on electronics. They're going to pay it across the board. And that's really what you're seeing in terms of self.
Now, you have to be careful. And it all depends where you sit. Are you on the right or you on the left, right? If you're on the right, quite frankly, I'm not so sure if the U.S. administration is worried about Wall Street. They're more concerned about Main Street, okay? Yes, prices are going to go up, but technically, if it works the way they want it to work, then you bring your factories over here and you build them here. Well, at least you make a deal to build them here because it's going to take a while. And in that case, this is for the rights consumption. In that case, you are able, therefore, to not pay that much for the products. But is it actually achievable? I am not so sure that Apple is going to start, spending money and building plants in the U.S. so that they don't have to, face with the type of tariffs. And frankly, you're going to have to pay more for the U.S. workers, right? So it's going to be more expensive. Is that truly going to happen? Well, I mean, that's what they tell Main Street. And Main Street says, yes, that's right. I want to work in an iPhone plant. Yes, I want to work for Ford. I want to be like it used to be in the 50s, right? We used to make stuff in the US. Yeah, that's going to take a while, quite frankly. And the other end is negotiation. But maybe the government knows that already. And since they're playing chess, they're assuming this already. And they are probably thinking, yeah, we keep talking back and forth. In the meantime, I want to collect my money.
I think right now, tech stocks, you look at a name like Apple, essentially baking in numbers cuts, 12, 15%, and margin erosion that could be more. So our view in terms of how we're navigating this very similar is COVID 2020 is that you have to look on the other side, assuming some sort of normalized earnings into 25 and even 2026. And those are the names, whether it's Microsoft, Apple, and some others. That's how you navigate from, looking at the scenarios.
So you get, that was a couple of days ago, but so you get the basic idea. The basic idea is this is not going to work. I don't want them to pay that kind of money. Therefore, the administration doesn't know what they're doing. Well, I think they know very well what they're doing. Okay, I'm not saying I'm agreeing with what they're doing or disagree, but this looks to be very systematic, right? First, they went to Europe and they say, "I'm not spending any money on your defense." Then they went to the immigration and they started that. No, they didn't complete any of it, obviously, but they started on both of those things. Then they did the tariffs. Then they did the Doge, right? I mean, we're going to get some money back. How much money they're saving? Maybe it would appear now that Elon Musk is leaving. But the point is, they've gone systematically through all of them, and now they're doing the tariffs, a big piece. Okay, we thought we're gonna do the taxes and the regulations, right? You thought that, right? We so easy. No, it's more complicated than that. So that was the goal all along. The trick is, how long is it going to last? The trick is, what is going to be the impact? Well, you're seeing it now. Now, of course, I don't know if you remember, but at the inauguration, you had all the tech people there because they were like, okay, what is this guy really up to? Well, we're friends, right? Well, you got Elon Musk with you, so you're not going to do anything fancy about the tariffs because we think ahead too. That's how we make money. We became billionaire because we think two, three, 4 steps ahead. And they thought that they had Trump. But keep in mind, you need to know the history behind the man also. He was in charge of casinos a long time ago. And you should read the story and see what happened to the casinos and how were this handled and what happened at the end. So you need to understand the story. You need to understand the strategy. And if you think you know, you don't know. And in this case, you don't know. Okay, so that's the first thing. The first thing, yes, it is Armageddon, and this is a problem, and this is going to be an issue. But so what is the goal here? What is really going on deep down? Well, what's really going on is first we need to collect on these people that we couldn't collect. That's money that's going to come in right in, right? They're collecting some money from Doge and collect some money from the tariffs. Is that going to be enough? No, it's not. We owe $37 trillion. Okay, every year it's $1 trillion in interest. You spend every year, you spend enough money that you spend on defense in the U.S. and we're spending a lot of money on defense. So that's a lot of money. Now, what else is going on? Well, that one is a little bit more complicated, but is just as important. And let me share my screen with you. And that one is going to be a doozy. It's basically this. Is the dollar losing market share? There's a loss mark. Well, take a look at the dollar. 70% in the 2000. We're down to 60%, and that was about last year. And the concern is, as you could see, is that maybe we are having issues with the dollar being in terms of global reserve. Now you're going to say, what do I care? I'm not. I got dollars in my pocket. Well, you need to care. And the reason you need to care is because, again, we're not thinking one step, we're thinking two, three steps ahead ourselves, right? So that I could help you make money in this market. Um, if the dollar is getting weaker, meaning that it's not so much the weakness, but that people don't need to hold dollars anymore, right? If they don't need to hold dollars anymore, then who is going to be buying debt to refinance it every year? Every year when we refinance the 37 trillion, not all of it, but every couple of months or so, it gets refinanced. You got to go to foreigners to basically buy our debt. And the reason they buy our debt is because they need dollars. So they could, because a lot of since World War II, the dollars has been very, very useful. Lots of things in the world, including buying oil, although not anymore. So that's changed recently. But if they don't need dollars to do business with us, then they don't need dollars, and therefore they don't refinance, and therefore, how are you going to refinance the $37 trillion? One day they're going to say, you know what? I don't want to buy that much dollars anymore because I don't need it. Because don't forget, our rates, the US dollar rate, which is around 4.2 or 3%, is the highest, in the world, in the civilized world, basically, and in the Western world, where you know you're going to get your money back. And yet, the dollar is now losing ground against the euro. That, my friends, is chess. That is what you need to worry, because if the dollar loses of its value, i.e., if nobody wants it, I mean, it's good in a way that it loses its value, because if you're building things in the U.S., right, it's easy for them to buy because so it's good for the manufacturing. But this is for Main Street consumption. But for your consumption, my subscribers, you need to realize if they don't hold dollars anymore, they will not want to refinance the debt for the US. And if you can't refinance $37 trillion, then what you have to do is you have to raise the rate even higher to entice the people, the investor to buy our debt, even though they don't need it, because they don't need to use it anymore, because no one is buying from the US, or nobody's buying oil with the dollars. You know what I mean? And that's what you're seeing, that slowly, this is not a good sign, because if you don't use the dollars, that you can't refinance. And if you can't refinance,